All right, everybody, how we doing? Give me a second to get my screen going. I started it a hair too early, I guess. I'm getting there. Hold on. Be patient with me. All right. Can you see my screen and hear my voice? All right, we're good to go. All right, everybody, welcome to the webinar. New guys, happy to have you here. We are progressing through Q2 of 2022. It is very close to the end of April. All right, you should have a crystal clear view now that I just moved the panel out of the way. Man, I'm not seeing any responses. Hold on. Yes, okay. Thank you, I can appreciate it. All right, so we are good. All right, nothing in the way. All right, so we're progressing through Q2. Q1, I got to draw it for you. You know, I know you guys get annoyed with this, but you have to understand where we're at, man. This is done. It's just ripping through, man. All right, we're done here. And we are sitting at what we call, I guess, a checkpoint in the scheme of things. We're right here. So that means this week, 2, 3, 4, 4.5. And if you started on the first, 3.5. And in a day or two, this is over. We'll be starting into the second third of Q2. All right, so it's a 90-day cycle. We use the 12-week yearbook. You guys should have a plan mapped out. But we are at an inflection point, a checkpoint, right? A checkpoint reminds me of that game, like a racing game that we used to play, I guess, when video games first came out. Some of you guys are older. And it's like motorcycle racing or car racing, and it was a big arcade game. And used to go, when you pass, it used to go checkpoint. Okay, that's where we're at. We're at a checkpoint. So you got to check yourself. Where are you at? All right. How do you do that? That's the question I always get. You got to evaluate your workload over the past 4 weeks. What have you done? Okay, and it could be anything from trading. If you're brand new, you're doing homework, looking at videos. Okay, what have you done? Have you watched the video every day, 5 days a week? You should have 20 videos down. You should be caught up. Have you watched a half a video? Okay, and if you're like burnt out and you're like, man, I hate this guy, okay, then you got to adjust up or down. If you hate me, adjust down. If you're sick of hearing my voice, adjust down. Less of me is a good thing. That's my wife. Adjust up. If you don't feel like you've gotten enough done, if you feel like you're falling behind, adjust up. Make the adjustments mentally and physically do it. Okay, if you're trading, if you're actively trading right now, go back and evaluate your last 30 days. Where are your stop levels at? If you're using a 30 pip stop and you realize, man, out of all those trades, the ones that were full stop would have been no matter what. So then you leave those out and you look at the successful trades or the ones that got stopped for less or that you scratched out of and realize, okay, I got stops to break even. 20 would have worked, 18 would have worked, 15 would have worked, and adjust your stops into the money. So it's just look at it as a timeline, man. If your stop is 30, an entry is here, there's some number between 30 and entry that can be adjusted to. If you did 75 trades, I'll make it 100 for easy math, all right? If you did 100 trades in the last 30 days, okay, you need to go back and evaluate. Let's say you went 70 out of 100. right? 70%, very manageable, very doable, and very profitable. All right. So you need to go back on the trades, the 30 that got stopped out, and you need to realize there's some number of that 30 that would have failed regardless. If you had a 30 pip stop, 100 pip stop, they would have failed. They're just wrong directional bias. Trend moved against you. Then you need to look and say, okay, out of the 30 trades that were stopped, 25 of them would have survived a 20 pip stop. And 5 of them were just totally blown. No matter what I would have done differently, the trade would have still not worked unless you got the bias right, right? So when you figure out this number, then you realize a 30 pip stop can be a 20 pip stop or a 25 pip stop. The stop should not be a drain on your account, and it should not be a mental burden for you going, oh man, if that stop hits, I'm going to be out big. You need to be out quick and clean and get into the next trade. That's the rub of the business. You know, I have a student that sent me a 55% profitable rate, but they made an astronomical amount of money in a very short period of time. Why? Because that person had the ability to shrug off the stop level. 55% win, that's not great, but it in this business, it's profitable. If you're trading 3 to 1, 4 to 1, and you're getting 55 out of 100 trades, right? Or 5.5 trades out of 10, right? Everything should be in blocks of 10. So if you're hitting 5.5 trades out of 10, but you're trading 3 to 1, 4 to 1, and you're using size, that's money, baby. In any business, right? In any business, that's money. You got to work yourself into those numbers and understand that just like hitting your profit, getting stopped out is part of the business. Can you strive for a higher success rate? Absolutely. It's there. But you have to work through your process and realize that as soon as you could shrug that off and move on to the next trade, you'll be successful. It's a numbers business. It's just numbers. It's math. I've been saying that for the last 10 years. If you could do the math, you'll make money in the business. The problem is everyone's so afraid of taking one hit because there's a lot of pressure to be good and be right. And that's from society. This stuff goes way back from childhood, man. Got to make straight A's in school. You can't be wrong. Don't raise your hand unless you know the answer. All the stuff that's ingrained in you as a child goes totally against the trading business. I mean, listen, I went to private school. I was ingrained in all that crap too. And it's like, you better be right. Don't raise your hand unless you know what you're saying. Don't open your mouth unless you know you're correct. All that stuff. Growing up like that makes it very difficult. Makes it very difficult to not just let your stop hit and move on. You have to figure out how to work through that. That's the biggest problem I've noticed in the group and the business. All right. So adjust your thought process about your win rate, stop sizes, rewrite your rules. It's just time to check yourself. It's perfect time right now. Going into the 1st of May, just make some adjustments, right? Your strategy, your ideas, what your goals are, your targets. Maybe you're trying to get 75 pips and it's just not there. Maybe you're tired of getting that first impulse leg and getting the massive pullback and having to sit through that and holding for here. I'm going to show you, if I get to it tonight, there's a chart that holding, like, I can't remember the number of bars, but I'll show you. Holding it so much longer only yielded 2 more pips, and you had to sit through a lot of crap. And it's understanding that getting in here and taking here and being out and then having another opportunity here to here instead of getting in here and exiting and sitting through all this session changeover and stuff. That's the kind of stuff you got to adjust on. So whatever you're doing, if you're trading zone flips, bounce trades, evaluate where you're at. Maybe switch trades. Maybe what you thought was your primary trade, if you go back and analyze yourself, maybe you're realizing, you know what, I'm hitting more on these flips than I am on the bounce, or harmonics are killing it for me. Okay, well then you need to shift your focus to the stuff that's really working for you. It's mostly math, but it's a lot of mental too. That's the problem, is taking a loss and keeping it in stride and moving on. As soon as you can accept that losing is part of the business, you're going to be successful. The problem is that a lot of people get rattled and they get off their game. What is it? Football saying you got to stand strong in the pocket, stand tall in the pocket, take your licks, and move on. And here's the most important part, man. You see all these people qualifying in the group, and listen, they deserve the praise when I mention their name, and you're like, man, I can't believe it. I'm still struggling. Okay, you know what? You're working to best yourself. You're not working against me. You're not working against Jim. You're working against yourself. This business is a very alone, totally dependent on you. And the problem with this is everybody's journey is different and unique. No matter what, it's all on you. And you can't compare yourself to the way I grew up. Here's the problem. Okay. I grew up, I don't know, lower middle class, whatever you want to call it. You know, my parents are probably like, they're both passed away. So I guess I could talk crap now. And listen, everybody goes through stuff. I've mentioned this in my live speaking engagements. If you grew up with your electric bill getting cut off or eating peanut butter sandwiches on Thursday night, waiting for your family to get paid, if you had struggles like that, that shit affects you in this business because you have a different opinion on how valuable money is than somebody that had $40, $50 balled up on their floor in their room and never thought anything about it. Or they get a bunch of birthday money and it's on their desk for a month. They have a different opinion about money and about the value of money. It's how you grew up. So there's no way you can compare your childhood to my childhood because maybe I was abused, maybe I wasn't, maybe you were. There's just different things that affect your value and views on money, and that follows you in this business. You got to figure out your own shit and you got to work through it. Okay, whether it's seeing a trading coach, seeing a hypnotist, whatever. Site K is where it's at, in my opinion. But everyone's journey is different, and your value and opinion of what you place on money affects you in this business. And you got to figure out how to work through that. And it's different for everyone. I can't tell you anything that happened to me that I got over and how I got over it because it's going to be different for you. It could be a slightly different, what is it? Variation on the theme, but that's your baggage. You got to work through it. What made a difference for me is my time on the fire department. Very methodical, very checklist oriented. Like everything was safety checks and checks. And, I named a lot of the stuff from my career there, right? Safety trades. There was a lot of stuff, get to safety, get outside the hot zone, all these different things that are part of my experience that, I designed the system around that, but that stuff doesn't mean anything to you guys. There's like stupid things that I remember clearly that I just did for a long time as a fireman that translated well over into the trading business. Right? Always talk about safety on the fire department, not killing anybody on duty, and that's where the safety trade came from. It's the safest trade you could do. There's like a safe entry. Okay, well, in fire department, entering a building, there's a safe entry. There's a certain way to be in the building, right? There's a certain way to go in, a certain way to crawl. There's a certain way to follow. If you get stuck, you follow the couplings on the hose. Right? There's a male and a female coupling. Males go into the building, females come out of the building. So you get on your hands and knees and feel the couplings. If you can't see, if you're totally blacked out, and you can find your direction by following the working line. Just stupid stuff like that. I don't know if it's stupid, but stuff like that has been ingrained in me on the job, and I've carried it forward into the trading business. And I feel like for me, it's translated well. But I could sit here and explain this to you all day, but until you've been in a totally black room with smoke 3 inches off the floor, and you get lost or get turned around and you can't find your way out, and you feel those couplings, that's where the experience comes in. It's the same thing in trading. Until you sit here and take 100 trades and evaluate your trades and make the adjustments, you're still going to struggle. You have to move in this business. You got to keep moving. You got to take trades, take your stops, and move on. You have to move. It's just math. All right, so this stuff is all based on the 12-week year. You're mapping out. We talk about this stuff. You get a calendar, you map it out. There's 90 days in a cycle. You check yourself every 4 weeks, 3 to 4 weeks. We're at an inflection point or a checkpoint right now. If you're brand new, there's a couple of you in here. We used the 12-week year by Brian Moran. Don't steal this guy's work, man. He did a great job. Go to Audible, get it, download the book. We always do books and audio for you new guys. All right, some other trade book ideas. Trading in the Zone's a really good book. We read it a couple years ago. We're back around looking at it. And this Gary Bishop guy's pretty good. Just talking about self-sabotage, why people get in these cycles and how to get out of it. And he's my hero. He's got the same mouth as me. I think he grew up the same. He's got a bad mouth. So if you don't like that kind of stuff, the book's probably not for you. All right. Let's get right into some charts tonight. So this, I don't know what happens. This comes up every couple of years or really every couple of days, but it's a thing called permafade. And I don't know how to help you guys other than to go through some charts and talk about it. It's trading every move or candle in the opposite direction, no matter what the prevailing trend is. Ignoring the moving averages right in front of you, particularly the water line, right, which is very similar to the volume weighted average price. Sticking to your bias no matter what the drawdown is or the obvious move. It's a mental block, a stubbornness to adjust and recover. And man, I don't know how to teach you how to adjust yourself on the fly. But I got a couple of trades submitted to me, and they were dead wrong on the bias, pound long, and I'll show the charts and talk about it in a few minutes. But a lot of people had pound long the other day, and there was a huge correction. And I want to talk about that chart. We're going to look at it, and when you see it and start to apply a dealer mentality to that, you know that the reversal was coming, the drop, massive drop that we had a couple days ago. The problem is people were going long on that. They kept getting stopped out. They would get stopped. They'd move down. Some people just kept opening buy trades against the sell side cycle. And obviously everybody got called out and decimated that we're doing this. The biggest problem, right? This is why I'm talking about this crap tonight, is go to school. You can't be wrong. You have to make straight A's. You have to be right. Is the ability to adjust and recover yourself. And a lot of people can't do that. You have to sit back when you're losing money. You have to sit back and look at the screen, look at the averages and go, man, that shit's pointing straight down. What am I doing getting long? You have to use auction values, see if price is above the swing points. And I'm going to cover this stuff for you tonight to give you a general idea of how to adjust on the fly. Permafade is something I made up. It's not it's a haircut, right? If you're bald on the sides, you got permafade. But it sums up a lot of the problems within the group. People write me and go, what did I do wrong here? Well, it's easy to sit back and second guess what was going on, but I don't understand how you could have a chart blindness for that amount of time when the whole bottom was falling out. You know, there was some mid-level consolidation in the pound, and people tried to get long there. Right? A slow and steady move is the move. A fast, aggressive move is the false move. When that thing's taking hours to drift down, the whole session straight drop, then it goes into mid-level consolidation, the bias is absolutely short unless they break above the auction levels. All right, let's take a look, some charting, and get there. Any questions about this stuff? I mean, listen, a lot of you are suffering in silence. You don't want to admit that you went long there. That's fine. Some people admitted it and sent it to me. And I'm never, ever going to embarrass you publicly on this format or in person. Never. So send it to me, and we'll lump it into the group and we'll talk about it. There's no shame in getting long there. I understand why people went long, but we're going to look at the charts and try to see the bigger picture. All right, so I got a quick pop quiz for you. I'll give you a minute on the clock, and you just tell me everything you could see going on this chart. Ready? And I'm going to shut up for, believe it or not, for a minute. All right, ready? Go. All right, a couple people popped up their answers. Appreciate it. Okay, so someone posted something. If you could do the math, you could do the craft. I like it. Okay. All right, I want to point out that this person had a small entry here. All right, and he's long side. If you follow this tracer over, right, he's long here or here. Okay, this is exactly what I'm talking about. Mid-level consolidation. So let's look at. I'm trying to erase the drawings on here, and they will not erase. All right. So look at the moving averages right in your face. Right. This is a couple weeks ago, but this just happened. This is early April. Right. Literally a couple weeks ago. So look what's going on here. You see that, right? Consolidation. They're bringing it in. Look at this high swing. Look at this low swing. Now they're trading in between that. Look at the 200. Look at the 50. Right? This is a 15-minute chart, so this translates well. Right? If it was a 5-minute, the averages aren't as accurate. But on the 15-minute chart, this is our market basis. Right? This is the higher time frame, 50. The 1 hour 50 is plotting as the 200. Right? Where do I get that from? If you take 50, a 1 hour chart is 4 times greater than a 15-minute chart. If you take a 50, multiply it by 4, you get a 200. That's where this came from. It's not just some random average I put on there. You're looking at your market basis on 2 charts when you see this. The market basis on the 1 hour chart is sell side. The market basis right in your face is sell side. Okay. Now, when the dealers consolidate for a couple of days and they're trading, and by the way, there's the 4-hour marker, sell side, trading below all the averages. This is actually what you would call POMA, which is the perfect order of moving average, POMA. Not my term, by the way. I think it was Kathy Lean. But anyway, perfect order of the moving averages. You got, they're lined up, they're not spaghetti, they're clear, right? And you got ketchup below. You got everything lining up perfectly. So they're in perfect order. They're not spaghetti, they're not crossing each other. The blue's not over here, and every other time frame is down. So this is the perfect lineup for that. Second, the dealer hasn't really made a decent move. Okay, look at this number right here, 32 pips. This is all the stuff you should be able to walk up to a chart and see. Very narrow Asian range, 15, very tight. So what happens? They're bringing it in, right? They're bringing it in. When they start bringing it in, that's when you know you got to realize where you're at. And I don't know why this won't erase, man. I'm really sorry. Let me see. All right, we're in business. Okay, now you're looking at the levels. Okay, so we would technically draw a box around this high swing and stretch it out. Okay, we're going to take the low swing and we're going to stretch it out. Okay, right here, identifying mark, blue tracer. Okay, blue tracer. What is it stationed right there? Yesterday's low. Okay, we're looking at the low, consolidation off of the low. Price sets up in the Asian range. Now, we want to take the Asian range and extend the AR numbers, right? Which is automatically done for you in your AR 50. Okay, you should walk up to the screen, look at the 1 hour chart, and automatically have a sell side bias. Why? POMA. Okay, now, if you're waiting for a confirmed sell trade, the dealer comes out, makes a little mild stop hunt, right? That's a level 2 type of setup or an AR 50 trade. He makes a little bump into the 50 and he vectors out of there. We know that the vector is scary and it's identified as possible false move. He makes a nice little pattern off the low. And this guy was thinking stop hunt, low, buy long. But if we were waiting for a confirmation, the next thing on the chart that needs to appear is these two little boxes right here, which also line up with the last swing low. So he's trading below yesterday's low. He vectored past it. He retested it and failed to get back above yesterday's low. Failing to get back above a previous high or low, above or below a previous high or low in the business, is a sign. If it's rejected at the blue tracer, right? That's why BT is a landmark. If he fails to get back above or below, depending on which line you're looking at, you got something there. Rejected previous low from yesterday or 2 days ago. If he's trading below that and gets rejected, this becomes the auction level, right? So now you're looking for an opportunity to go short, right? He has all these moving averages fanned out, but yet he got long here. So now what's the play? The play is vector low, takes out this swing low, takes out this swing low. He goes back, he rejects at the high. You're looking for leg, this is a leg 1 M. You're looking for an entry on L2, leg 2, right? You're looking to get short. If you want to wait for a rejection shift, you could do that, and this is a possible entry here. This is the absolute best entry on the planet. Got a very low risk and a potential for full run into the end of the session. Okay, so you could take a measured move from the high swing to here and get some number that is probably equivalent to that. So everything is in your face. It's staring right at you to go sell side. You're using the vector as a reason to get long. And we know that when we look at Bookmap, they flush orders to take out levels, right? They put the big bubbles in, Pac-Man. So in that, to get through that level, there had to be a Pac-Man in the book because it's 3 hard candles, right? Which would basically, this would be a 1 hour huge sell side candle. If you look at the 1 hour chart, look, 1, 2, 3, 4. Let's just say for argument's sake, the 1 hour closed here. It would be a candle that would look like that. I know, I got erased. I draw too much. All right, so if you count, just for arguments, let's just say that the timing on this was just one big red candle on the 1 hour chart. Because we know it started somewhere around here, and it closed down. So you have a beautiful 1 hour candle pushing down that shifts through yesterday's low. Then they pull back mid-body, right on the low, and it gets rejected. So your box would come in like this. Draw your box right here. That's push 1 or leg 1 and leg 2 of an M formation. And you're looking to sell either here, close a catch-up, or break out here. As soon as this level closes below this level and you have all these other telltale signs in your face, that should flip your bias to sell side. Okay, so sell side, you sell. That's it. There's no other way to explain it. You don't buy against the move. You sell against the move. Okay, you had a possible New York reversal back to the 50, but the trade was sell side for London. And to me, I don't really see a good entry here. Maybe if you drill down to a 5 minute, you might have got something that looked like a W, but sell side book. All right, so that's this chart. Same thing. Again, tell me. Okay, yeah, someone's wrote the stuff in, a couple of you. Yes, I didn't see it. So yeah, it's an AR-50 into the zone flip. Perfect. All right, next one, go. 1 minute. Okay, did you get it? It's the same chart, essentially. There's just the landmarks aren't as clear. Right, but look, blue tracer's on the high side. Blue tracer's right here on the high side. Right, and it happens to be the high. So now, this should paint the picture for you. If this is the high, there's your box right there, right? So now you have them rejecting a previous high and getting rejected and closing below, right? You have a spike candle taking out this side. You have a nice pin through here, runs up into the high and rejects. And if you notice, the body is pushed right into the low. It literally closes on the low. Push-ups, solid green candle, induces, hit stops of anybody here, and then shifts through. Okay, so where's the entry? Okay, you need the same exact thing. Look at the amount of bars, right? You got a nice push into the low, right? Railroad tracks back into the high, and then it fails to take out the level. So if you look at a full day, you have push, push, mid-level consolidation, push, right? And it's some variation on that. The consolidation could come after first push. So if you take this microstructure, a small slice of a 24-hour period, and you look at that, can't see my mouse. There it is. Okay. So pretend this is the high and this is the low, and this is mid-level consolidation, and this is push one consolidation, push two pullback, mid-level consolidation. It's the same thing as an entire day structure. It's just a microstructure or a slice, a time slice of the same thing that happens in a 24-hour period, right? The averages are flat printing, right? And some can mistake this. This is the gator starting to open his mouth, right? You guys know that, the alligator. But then he shuts it, slams it shut, and drops. But this would be considered mid-level consolidation. So this mid-level consolidation is printing an M for a continuation trade sell side. Right? We've closed below. The averages are out of order, but we close below, and this does appear to be a stop hunt. But if you notice, the close on this takes out this level. And when it closes below and pulls back and fails to get above, in order for this to be a long side trade, you would need price to break above this mid-level consolidation. He's got the box in the perfect place. He drew this perfectly, but in the same iteration, he took the trade the wrong way. Right? This is just a variation on the theme. My favorite word. I haven't said it in years, and I'm back saying it to you guys every 5 seconds now. But if you look at what's going on here, this is the same structural components as this. It's the same thing. And in fact, this is to me, this is clearer because of how the moving averages are stacked. So the fact that this is stacked so clean that you have POMA and you have good separation in here, this to me is more visible, and he got the other one right, and this one was a tough trade for him. I don't know what's more clear to you guys, but obviously the first one is clearer sell side. This one you have to do a little more digging. You have to understand what's going on. You have to realize that you're in a flat print. Anytime you get like the gator starting to form, or you get these averages like where they're like this, look at the angle on these. Look at the separation. There's a cross, obviously, but look at the angle and separation as they start to move. When you see flat moving averages, that's called a flat print. Whether this doesn't really appear to be flat, but when you zoom out to a 1 hour, 4 hour chart, this is flat. Your bars are going to be in some kind of consolidation pattern. The 4 hour chart could look just like that. It's just going to be less bars, and it's going to give you a flatter print. But that's what you're looking at. And you have to be able to recognize these points on the chart. You have to realize, man, they can't break the swing high, right? Yesterday's high was barely violated by a couple of pips or ticks. Yesterday's low down here, we haven't violated that yet, and they respected it. They gave you a quarter wood and pulled back in. So the object would be how many pips between here and here? Is there enough if I get in at mid-level consolidation and I measure a move out, right? If I take this number, right, we know it's something greater than 35 because there's a measured 35 right there. And we got a rejection through here. And we know that it traded below Asia. So maybe a 40, 45 pip move, maybe another 15 pips to this swing low right here. So it's just math. If you look at this right away, 35 pip Asian range, they spike slightly above and traded below. There should be enough measuring from here to here to get a measured move. If I get in here, it should be equivalent. And there's enough for me to make some money in there. It's just projections, math, and understanding the background. Stop looking at it like a retail trader from the front. Look at it from the back. And stop fading everything that looks like a vector. Right? Vector's a legit pattern. But what has to happen is it has to go in line with the other things. And that being the tracers, the averages. Flat print is a sign of something coming, a change of direction, right? Or an angled print, separation angled is a continuation. Okay, so you could take a bounce off of here as a possible opportunity or a bounce off of here. You got a fresh cross, sell side, bounce, bounce. And then you would take this measured move here and you would measure it into level 3. And that would give you an entry from here. If this is 60 pips from here to here, you would project out 60 pips. That would give you a good target. Maybe make it 50, 45, depending on your taste and how long you want to be in. All right, so what's the difference in the charts? I kind of pointed it out already, but I want you to think about this. This is important stuff. This is the stuff that makes or break you as a trader. If you don't get such a bias locked in, if you try to see the background of what's going on, that's how you're going to be more successful. You can't just read price. You have to read the background. What are these guys doing in the background? Right? And it's a simple answer. Nothing. They're variations on the theme. Those are the same prints. Both of these charts are the same prints. They got the same elements that we've been talking about together for, I don't know, 12 years now. However old my son is how long I've been teaching. And he is 12 years old. Some of you remember, some of you actually seen my son when he was a baby in Orlando live. My wife brought him over. He was literally in a stroller or car seat, whatever. And now he's long and tall enough to sit in the front. It's crazy. Anyway, that's how long I've been teaching. Both of those charts have the same elements. If you don't see that or can't recognize that, then you need more background work. This is that. The only difference is the background is cleaner on one and less clear on the other. And ironically, he got the one that wasn't as clean correct, and the one that to me was crystal clear incorrect. I don't know how he did that, but it doesn't matter. He's got to work that out. Okay. Next chart. Same thing. Give you about 45 seconds. You ready? Go. All right, less than 45 seconds. This chart is the same as those other two charts from 3 weeks ago. And this is what happened this week. Did anybody recognize that? Do you see what's going on here? Look, first of all, it's a pound pair. And you always get this. You get a shoulder, head, shoulder. Look at the tracer. Look at the tracers. Okay, look at this. Right, you got a crossover here going into the next day. You got a POMA thing going on. Okay, now you got to ask yourself a question. If the dealer accumulates for 2 or 3 days in the week, what's going on? If the dealer accumulates flat print, if you're trading this, you're like, oh, I don't know what's going on. Like when you get into a microstructure and you don't look at the bigger picture, if you're trading long here, and that's okay. If you're trading short here, and you don't get much, you took those trades, you're not looking at the bigger picture. 1 hour chart. 1 hour chart is enough to get an idea what's going on. Why? Because that swing low printed the same on a 1 hour chart that it printed right here. A low is a low and a high is a high. The highest point on the chart's the highest point on a 1 hour. It's the highest point on a 5 minute. Doesn't matter. But look at the tracers, man, the high and low, right? You're trading right inside the tracer, right? When you get rejected slightly through and come right back into the range, previous range of yesterday, that's a flat print. Look at the averages, flat print. Averages are flattened out. Okay, something's going on here. The averages are printing flat. The averages don't traditionally print flat. They print like this when there's a move, right? You have to understand that for the dealer to hold the level the first part of the week and not make a move, that something is going on. They don't accumulate because they're bored. They accumulate to balance the books and see where the next move is. And you have price dropping. You have a big accumulation for a couple of days, 2.5, 3 days of accumulation. When they accumulate for this long and they shift off of the highs, right? Look at this in 2 steps. Look at it as, okay, step back. What are these guys doing, man? Look, they accumulated above the average long. Then they went below the average accumulated here. Something's going on, right? They shifted the zone below the previous zone. So induce longs, trade above the averages, show a couple of bounces, right? Run it up. At the same time, trigger the stops of the short sellers. Shift it away, take out the swing level, and pull back. This is technically an AR50, right? Happened in the US session. They take this swing number and they trade here and they pin, right, to form out the other shoulder. They pin through the tracer and then they shift it off. Now, all this becomes blocked, right? Picture the book in your head. This is all blocked. No mas, no more trading in that level. We got all the suckers, I mean traders we need to go long. Now we're going to trade below it. Very, very tight consolidation, right? I've talked about this. Imagine a wedge and a funnel, right? You're a dealer. Bring it in, 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 tighten it up really tight like a spring. Bringing it in. Higher level longs, lower level shorts. Think about it. Look at your books. See where you are as a dealer. What do I got? I got an enormous amount of buy side volume. What would be the reasoning? Pound's been dropping. People figure it's got to pop back long. But you got to let the technicals decide. And you got to let price action decide which is the true direction. My averages are showing higher. As a dealer, I'm interacting with the previous high. Why do they interact with those blue tracers? Why? Because people's volume is stacked there. When we look at the book, right, the highs and lows give you that dealer's insurance stuff that I always talk about. You get those stacks of you get those stacks of right here, you would get a red stripe, right? You would get another, maybe like a darker going into orange. You'd have some neutral space in the book, and then you would have a massive orange stripe here. And what happens is there's usually about 10 pips between this level and this level, right? So what happens is the dealer will flood this area with, I don't know, 10,000 lots, 5,000 a level. And then this single area by itself might have 20,000 lots sitting on the book that you just can't see. So what happens is that if by some major catastrophe this gets full absorption and bleeds through, there's 10 more pips of insurance to make sure the level is not penetrated. I've showed you pictures of that. It's heavy orange in the book, an opening, and then one massive order on the line. And this number is not manageable by any single retail trader. It's impossible. But it's a collection of bank orders that put in probably tens of millions of dollars to block that level to make sure that we ain't getting below that. So what happens is you have this stacking in here in the book, and you know that they're going to trade into these levels, sell side, right? This would be the bleed. This would be maybe a 10 pip bleed, and this probably was capped, right? Capping. This was capped by a big orange stripe. So if you start understanding what you're looking at, okay, flat print, bring it in, bring it in, bring it in, very tight consolidation, 24 pip range on a pound. It's very tight. What's going on? The averages are lining up for a cross. They cross right at the end of the US session, and they are contained by the water line. Okay, first of all, when you walk up to this chart, you look at the massive consolidation on the longer couple of days thing going on. Contained by water. That's basically a 50 bounce, right? The first touch on a cross, crossed over, and it touched right there. If you took that as an AR type trade and you went sell side, you're 100% right. How do you find the mark? The mark is going to be the first rejection back into the 50, and you box it out. I'm talking about this stuff forever. It's free money, man. Okay, right here. Now, there's your box trade, right? 1, 2. That's a microstructure M and an AR50 trade. It's basically a 50 bounce trade that just exploded. Right, then you start to get some of your patterns, right? You got a nice push. You got 2, 3, pullback. There's another trade right there. What's the projection? You take this move from here to here, you project that out from here to here, and you have a nice move into the next session. Consolidation, push, 3, 2, 1. There's your trade. Okay, I missed this, but I got the mid-level consolidation on the 6 contract, and it was perfect. It's set up perfectly. This would be your London pullback in session. I was still screwing around in here, and I missed it. And this, look, you project this out, and then here it is, starting to get your sideways print. Steve, how'd you know it was going to keep going? What made me know it was going to keep going is this. They don't do this to go 20 pips. They don't do this for 3 solid days and not make a move because they're bored. This is bookwork. That's bookwork. When you see that, you just know, okay, man, they're accumulating big. They're holding these levels for a couple of days. Something's coming, right? And there's only 2 choices it could be. It could be a break higher all the way back. They can accumulate a lower level shorts, or they accumulated higher level longs, balance the book, and then they punish again. So at this point in time, There was more buyers, people believing price was going to go up, than there were sellers, right? So who got punished? Buy side got punished. Buy side took the pain, sellers made the gain. Okay, you understand? You have to look at it from a different perspective always. You can't look at it from your side of the board. You got to look at it from the back side of the board. This mid-level consolidation on the bigger picture, the scheme of things, was sell side. Some people got caught long and refused to give it up, and they got beat up, right? And I seen people in the group this week send me multiple buy orders around here, and they had a chance maybe to cash out, and they did not. Depends on how good of an entry you got off the low. But all this stuff is staring at you, and it breaks my heart when I see stuff like that, because I don't know how else you could see it. Right? You're following the tracers. Use the tracers, and I always talk about taking the tracers. When the tracers are printing about the same for a couple of days, you could just box those in. That becomes your box trade, your box top trade, or your box bottom trade, right? Look at the tracers. Just draw this. Look. Take the tracers and draw that. Okay, now any violation of that should give you the directional move. I know it's not perfectly clear, but line up the tracers. Line up the tracers for the last couple days. That gives you a pretty good idea, right? And I forgot to point this tracer out right there. See it? Okay, trading above. That induces people to go long. But then when they fail to take out the level, right? In order for this trade to be buy side, you got to get above this swing, right? What's the two viable options? What it did or what it could have done, which would be a trade above yesterday's swing high, take out the current auction level in the book. To take out this auction level, they got to pull the insurance, and they got to take out the couple of orange levels in the book. That's what you have to see. To take out the orange levels, they need a nice big push. Maybe you would have a higher rejection candle and get some absorption, pull back into the middle, then trade above. And this would have been an AR50 long. But instead you had basically an AR50 short. Draw this as a box. This is about middle of the box, isn't it? So on a larger scale box, that's an AR trade. That's an AR50 right there coming out right out of the end of Asia. And it's lights out. And if you were long on that, it's margin out. Especially if you didn't have the foresight or the make the adjustment on the fly and not keep adding orders hoping you would aggregate in. You're not going to aggregate that. You're just going to aggregate all your money to the dealer. You might as well just almost like going all in at a broker, at a poker game rather. Slide all your cash in and just walk. Because you got like you're holding, what would you hold? Like a pair of threes. That's what's going to make you successful in the business. The ability to think on your feet, look at the bigger picture from the backside. I've been saying this for 20 years or teaching it for 12. Backside of the screen. What are these guys doing, man? Man, I got some flat blue tracers. For the last couple days, those blue tracers are trading within each other. Something's going on here. These blue tracers are flat printing. They're not stair step. Look, when you got a nice trend move, the blue tracers do this. Right? And you're like, wow, look at those blue tracers. Okay, count the blue tracers, box them in. Now all of a sudden, miraculously for the last couple of days, I got blue tracers doing that. Okay, so what do I got? I got a downward move. I got a flat print blue tracers. On a bigger scheme of things, this could be a mid-level consolidation or could be a level 3 reversal. Right? So there's only two possible moves. Get above the tracers, go long. Get below the tracers, short, sell side. And you know how sell side is, creates panic. When the stop losses start fueling, the margin calls start fueling into the pool, huge, massive sell side drop. That's exactly what it gave you. All right, I got more of this stuff, man. I'll pick up exactly here next week. Got a bunch of charts I want to go over. I didn't even get to a third of it. It is 58 after. I refuse to keep you guys past an hour with my big mouth. This stuff will be here. We'll talk about it next week. Send me questions, homework. Listen, it's checkpoint. Check yourself, send it to me. You've been around long enough to know that I'm not going to call your name out and I'm not going to embarrass you in the group, but I'll cover your topic. And this was perfect timing because this happened literally 3 weeks ago, and here it is history repeating itself in the business. The pattern, the behavior's the same, the players are different. Right? The names have been changed to protect innocent. Same thing, man. It's the same process over and over and over. They move in threes. 3 weeks ago, 3 days ago, 3 minutes ago. It's all the same. SSDD, variation on the theme, all the crap that I've been saying for years. Here it is right in your face. You new guys, if you haven't heard all my crap yet, you'll hear it. Don't worry. I'm a broken record because it's the same thing day in and day out. The only difference is that you're aware of it now and you got to learn how to identify it in real time. That's going to make all the difference in your business. All right, guys. Good night.